Introduction to mobile home park investing. Mobile home parks, also known as manufactured housing communities, are properties where individuals own their manufactured homes but lease the land beneath them. This investment model offers a unique blend of real estate and business operations, often providing stable cash flow and attractive returns. Understanding the fundamentals of this niche market is crucial for aspiring investors seeking diversification and long-term wealth creation. These communities provide affordable housing options, which consistently drives demand, making them a resilient asset class. Investors often find that the operational aspects are simpler than traditional multifamily properties, focusing more on land management than building maintenance. But demographic trends in many regions also point to a growing need for affordable housing, further solidifying the investment appeal of mobile home parks. This course will guide you through the intricacies of this specialized real estate sector. Investing in mobile home parks can be a highly lucrative venture, distinct from other real estate asset classes. The primary income stream comes from lot rents, which tend to be stable and predictable, often increasing with inflation. Unlike apartment buildings, investors typically own the land and infrastructure, while residents own their homes, shifting significant maintenance responsibilities to the tenants. This reduces capital expenditure and operational headaches for the park owner. The demand for affordable housing continues to outpace supply in many areas, creating a strong market for these communities. Furthermore, mobile home parks often face less competition from institutional investors compared to other commercial real estate, allowing for potentially higher cap rates and better acquisition opportunities. This unique structure contributes to the sector's appeal for savvy investors. Market overview and trends. The mobile home park market is characterized by its stability and resilience, often performing well even during economic downturns. This is primarily due to the essential nature of affordable housing, which remains in high demand regardless of market conditions. Recent trends show increasing institutional interest, but the market largely remains fragmented, offering opportunities for individual investors. Supply constraints, driven by restrictive zoning and limited new construction, further bolster the value of existing parks. Many municipalities are hesitant to approve new mobile home park developments, making existing parks a finite and valuable resource. This scarcity, combined with consistent demand, creates a favorable environment for investors. Understanding these underlying market dynamics is key to successful investment strategies. Demographic shifts are significantly fueling the demand for affordable housing, directly impacting the mobile home park sector. An aging population, often seeking to downsize and reduce living expenses, finds manufactured housing an attractive option. Additionally, younger generations facing rising housing costs and student loan debt are increasingly turning to mobile homes as an accessible entry point into homeownership. These demographic pressures ensure a steady stream of potential tenants for mobile home parks across various regions. The flexibility and lower cost of living associated with manufactured homes appeal to a broad spectrum of income levels, from retirees on fixed incomes to young families starting out. Recognizing these trends allows investors to target markets with the strongest demand. Benefits of MHP investing. Mobile home park investments often boast high returns and remarkably low vacancy rates, making them an attractive asset class. The demand for affordable housing ensures a consistent tenant base, reducing the financial impact of empty lots. Many parks operate with full occupancy, generating steady income streams that are less susceptible to economic fluctuations. The relatively low cost of acquisition compared to other commercial properties can lead to higher capitalization rates, signifying a strong return on investment. Furthermore, the ability to incrementally raise lot rents over time, combined with the low turnover of residents who own their homes, contributes to predictable and growing cash flow. This stability is a key differentiator for mobile home park investors. One of the significant advantages of investing in mobile home parks is the reduced maintenance and operating costs compared to traditional real estate. Since tenants own their homes, they are responsible for the upkeep and repairs of their individual units. The park owner primarily maintains the common areas, roads, and utility infrastructure, which typically requires less intensive and less frequent intervention than managing multiple apartment units. This shifts a substantial portion of the maintenance burden and associated expenses away from the investor. Lower operating costs directly translate into higher net operating income and improved profitability. This streamlined operational model makes mobile home parks an appealing option for investors seeking a more passive income stream with fewer day-to-day management demands. Risks and challenges. While mobile home park investing offers many advantages, it also comes with its own set of risks and challenges, particularly concerning regulatory hurdles and zoning. Local zoning laws can be complex and vary significantly by municipality, often restricting the development of new parks or imposing strict operational requirements on existing ones. Changes in zoning or land use regulations can impact a park's value or future expansion potential. Navigating these bureaucratic landscapes requires thorough due diligence and a deep understanding of local ordinances. Furthermore, obtaining necessary permits for improvements or expansions can be a lengthy and unpredictable process. Investors must be prepared to engage with local government agencies and potentially advocate for their interests, as regulatory environments can shift over time, impacting profitability and operational flexibility. Tenant management and community issues represent another significant challenge in mobile home park investing. While tenants own their homes, the park owner is responsible for maintaining a safe and harmonious community environment. This involves enforcing park rules, addressing disputes between residents, and managing issues related to property upkeep or behavior. Effective communication and clear policies are essential to prevent minor issues from escalating. Unlike traditional multifamily properties where tenants can be easily replaced, mobile home park residents often have a significant investment in their homes, making evictions more complex and sensitive. Building a positive community culture and fostering good tenant relations is crucial for long-term success and minimizing turnover. Poor management in this area can lead to high vacancy rates and a damaged reputation. Types of MHP investments. Investors in mobile home parks can choose between several investment types, primarily buying existing parks or developing new ones. Acquiring an existing park is often the most common entry point, as it provides immediate cash flow and an established tenant base. This approach involves less upfront risk associated with construction and permitting, allowing investors to focus on operational improvements and value-add strategies. Existing parks come with historical financial data, which aids in due diligence and valuation, offering a clearer picture of profitability. However, existing parks may also come with deferred maintenance, outdated infrastructure, or existing tenant issues that need to be addressed. Thorough inspection and financial analysis are crucial when considering an existing park acquisition to understand its true potential and any hidden liabilities. Developing new mobile home parks while potentially offering higher returns involves significantly greater risk and complexity. This path requires extensive capital, a deep understanding of land development, and navigating stringent zoning and environmental regulations. The process includes acquiring suitable land, securing permits, installing infrastructure like roads and utilities, and then marketing lots to prospective tenants. New developments allow for modern design, efficient layouts, and the implementation of the latest amenities, which can attract a premium. However, the timeline for development can be long, and unexpected delays or cost overruns are common. This type of investment is typically suited for experienced developers with substantial resources and a high tolerance for risk, as the rewards can be substantial if executed correctly. Finding investment opportunities. Locating suitable mobile home park investment opportunities requires a multifaceted approach, utilizing both online listings and specialized brokers. Online platforms and commercial real estate websites often feature parks for sale, providing a starting point for market research. These listings can offer initial details about location, size, and asking price, though they may not always include comprehensive financial information. Working with commercial real estate brokers who specialize in mobile home parks can be highly advantageous. These brokers often have access to a wider range of properties, including off-market deals, and possess deep industry knowledge. They can help identify properties that align with an investor's criteria, negotiate terms, and guide through the acquisition process. Building relationships with these professionals is crucial for gaining access to the best opportunities in this niche market. Beyond traditional listings, pursuing off-market deals and actively networking within the industry can uncover some of the most lucrative mobile home park investments. Off-market properties are not publicly advertised, often leading to less competition and potentially better pricing. These deals can be found by directly contacting park owners, especially those who may be nearing retirement or facing personal circumstances that prompt a sale. Attending industry conferences, joining investor forums, and connecting with other mobile home park owners and professionals are excellent ways to expand your network. These connections can provide valuable leads, insights, and even partnership opportunities. Developing a reputation as a serious and reliable buyer can open doors to opportunities that are not accessible through conventional channels, giving you a competitive edge. Due diligence process. The due diligence process is a critical phase in mobile home park investing, involving a thorough financial analysis and valuation of the property. This includes meticulously reviewing income and expense statements, rent rolls, utility bills, and tax records to verify the park's financial health and profitability. Investors must scrutinize every line item to identify potential discrepancies, hidden costs, or opportunities for improvement. Accurately projecting future income and expenses is essential for determining the park's true value and potential return on investment. Engaging a qualified appraiser familiar with mobile home parks can provide an independent valuation, offering an additional layer of assurance. This comprehensive financial review helps to mitigate risks and ensures that the asking price aligns with the park's actual performance and market value. Beyond financial scrutiny, due diligence also encompasses a detailed physical inspection and environmental review of the mobile home park. A professional inspection should assess the condition of all park infrastructure, including roads, utility systems, water, sewer, electric, gas, common buildings, and landscaping. Identifying any deferred maintenance or significant repair needs is crucial for accurately estimating future capital expenditures. An environmental assessment is equally important to uncover potential issues such as soil contamination, asbestos, or lead paint, which could lead to costly remediation or legal liabilities. This phase often involves engaging engineers, environmental consultants, and other specialists to provide expert opinions. A thorough physical and environmental review protects the investor from unforeseen expenses and ensures the long-term viability and safety of the park. Legal considerations. Navigating the legal landscape is paramount when investing in mobile home parks, particularly concerning lease agreements and tenant rights. Each state and often individual municipalities have specific laws governing landlord-tenant relationships in manufactured housing communities. Lease agreements must be carefully drafted to comply with these regulations, clearly outlining rent terms, park rules, maintenance responsibilities, and eviction procedures. Understanding tenant rights, such as the right to quiet enjoyment, fair treatment, and proper notice for rent increases or rule changes, is crucial for avoiding legal disputes. Investors should consult with legal counsel experienced in manufactured housing law to ensure all agreements are legally sound and protect both the park owner and the residents. Non-compliance can lead to significant fines, legal battles, and reputational damage, making legal expertise an indispensable part of the investment process. Zoning laws and permitting are another critical legal consideration that can significantly impact a mobile home park investment. These regulations dictate where mobile home parks can be located, the density of homes, setback requirements, and the types of improvements that can be made. Before acquiring a park, it is essential to verify its current zoning status and ensure it is legally operating as a manufactured housing community. Any plans for expansion, adding new homes, or changing the use of common areas will require specific permits and approvals from local authorities. The permitting process can be complex, time-consuming, and may involve public hearings. Investors must understand the local planning and zoning codes thoroughly to avoid costly delays or outright rejection of their development plans. Engaging with local planning departments early in the due diligence phase can help identify potential obstacles and ensure compliance. Financing your MHP investment. Securing appropriate financing is a crucial step in acquiring a mobile home park, with traditional bank loans being a common avenue. Commercial banks and credit unions offer various loan products tailored for commercial real estate, including manufactured housing communities. These loans typically require a significant down payment, often ranging from 20% to 35% of the purchase price, and are underwritten based on the park's income-generating potential and the borrower's financial strength. Lenders will scrutinize the park's financials, occupancy rates, and the investor's experience in real estate or property management. Establishing strong relationships with commercial lenders familiar with the mobile home park sector can streamline the application process and potentially lead to more favorable terms. It is essential to shop around and compare offers from multiple institutions to find the best financing solution for your specific investment. Beyond traditional bank loans, investors can explore alternative financing options such as seller financing and private equity. Seller financing occurs when the current park owner acts as the lender, providing a loan to the buyer, often with more flexible terms than conventional banks. This can be particularly advantageous for buyers who may not qualify for traditional loans or prefer to minimize upfront capital. Private equity firms and individual investors are also increasingly interested in the mobile home park sector, offering capital in exchange for a share of ownership or a structured debt arrangement. These sources can provide significant funding for larger acquisitions or development projects. While private equity can offer substantial capital, it often comes with higher interest rates or a share of future profits. Exploring these diverse financing avenues can open up opportunities that might otherwise be out of reach, allowing investors to tailor their capital structure to their specific needs and risk tolerance. Valuation methods for MHPs. Accurately valuing a mobile home park is essential for making informed investment decisions, and the capitalization rate, cap rate, analysis is a primary method. The cap rate is calculated by dividing the park's net operating income, NOI, by its current market value or purchase price. It represents the rate of return on the investment property based on its income, assuming it was purchased with cash. A higher cap rate generally indicates a higher potential return, but can also signal higher risk, while a lower cap rate suggests lower risk and potentially lower returns. Investors use cap rates to compare different investment opportunities and assess whether a property is priced appropriately relative to its income-generating potential. Understanding local market cap rates for similar properties is crucial for an accurate valuation, as these rates can vary significantly by region and park quality. Another common valuation method for mobile home parks is the gross rent multiplier, GRM. The GRM is calculated by dividing the property's purchase price by its annual gross scheduled income. This metric provides a quick and simple way to compare the relative value of different parks based on their gross income without accounting for operating expenses. A lower GRM generally indicates a more attractive investment, as it suggests you are paying less per dollar of gross income. While the GRM is useful for initial screening and comparison, it has limitations because it does not consider the park's operating expenses, which can vary significantly and impact net profitability. Therefore, the GRM is best used in conjunction with other valuation methods, such as cap rate analysis, to provide a more comprehensive picture of a mobile home park's true worth and investment potential. Operational management. Effective operational management is crucial for the long-term success and profitability of a mobile home park, starting with robust tenant screening and onboarding processes. A thorough screening process helps ensure that new residents are reliable, financially stable, and will contribute positively to the community. This typically involves credit checks, background checks, rental history verification, and income verification. Clear and consistent onboarding procedures, including a detailed review of the lease agreement and park rules, set expectations from the outset. Providing a welcoming and informative experience for new tenants can significantly reduce turnover and foster a harmonious living environment. Investing time and resources into these initial steps can prevent many future management headaches and ensure a stable, high-quality tenant base. Efficient rent collection and a clear, legally compliant eviction process are vital components of mobile home park operations. Implementing a streamlined system for rent collection, such as online payment portals or automated reminders, can improve cash flow and reduce delinquencies. Consistent enforcement of rent due dates and late fees is also important for maintaining financial discipline within the community. When evictions become necessary, it is imperative to follow all state and local laws precisely to avoid legal challenges and costly delays. This includes providing proper notice, adhering to specific timelines, and documenting all communications. While evictions are an undesirable aspect of property management, having a clear, legally sound process in place protects the park owner's interests and ensures the integrity of the community's financial health. Professional legal counsel should be consulted for any eviction proceedings. Marketing and occupancy strategies. Effective marketing and occupancy strategies are vital for maintaining high occupancy rates and maximizing profitability in a mobile home park. Attracting new tenants requires a clear understanding of your target demographic and the unique selling propositions of your community. This can involve online advertising on housing platforms, local classifieds, social media campaigns, and partnerships with local real estate agents. Highlighting amenities, community features, and the affordability of manufactured housing can draw in prospective residents. A well-maintained park with a positive reputation is its own best marketing tool, so investing in curb appeal and resident satisfaction is paramount. Regularly assessing local housing market conditions and competitor offerings allows for dynamic adjustments to your marketing efforts, ensuring a steady stream of inquiries and applications. Beyond attracting new residents, enhancing community amenities and making strategic improvements can significantly boost occupancy and tenant satisfaction. Upgrading common areas such as clubhouses, playgrounds, or laundry facilities can make your park more appealing compared to competitors. Adding new amenities like dog parks, community gardens, or improved internet access can also justify rent increases and attract a higher quality of tenant. Infrastructure improvements, such as paving roads, enhancing lighting, or upgrading utility systems, not only improve the resident experience, but also demonstrate a commitment to the community's long-term value. These investments create a more desirable living environment, reduce turnover, and can lead to increased property values. Carefully planned improvements should align with resident needs and market trends to ensure a positive return on investment. Adding value to your park. Adding value to an existing mobile home park is a key strategy for increasing profitability and equity, with infrastructure upgrades being a primary focus. Modernizing utility systems, such as water, sewer, and electrical grids, can reduce operational costs, improve reliability, and attract higher quality tenants. Paving or repaving roads, enhancing street lighting, and improving drainage systems not only boost curb appeal, but also minimize long-term maintenance expenses. These upgrades demonstrate a commitment to the community, which can justify rent increases and reduce tenant turnover. Before undertaking major infrastructure projects, a detailed assessment of existing systems and a cost-benefit analysis are essential. Strategic infrastructure improvements can significantly enhance the park's overall value and appeal. making it a more desirable place to live and a more profitable asset. Another powerful value-add strategy is offering park-owned homes, POH, for sale or rent within the community. While many mobile home parks operate on a land lease-only model, providing POH can fill vacant lots more quickly and generate additional revenue streams. By purchasing and renovating older homes or bringing in new manufactured homes, investors can offer move-in ready options to prospective tenants who do not already own a mobile home. This expands the potential tenant pool and can accelerate occupancy rates. POH can be sold to residents with seller financing, providing an additional income stream from the home sale, or rented out, generating both lot rent and home rent. This strategy requires careful management of home inventory, maintenance, and sales processes, but it offers a significant opportunity to increase the park's overall income and asset value. Understanding park-owned homes, POH. Park-owned homes, POH, are manufactured homes that are owned by the mobile home park owner rather than the resident. This model offers both distinct advantages and disadvantages. On the positive side, POH allows park owners to fill vacant lots more rapidly, as prospective tenants do not need to purchase a home up front. This can significantly reduce vacancy periods and increase overall park occupancy. POH also provides an additional revenue stream through home rent, in addition to lot rent, potentially boosting the park's net operating income. Furthermore, the park owner has greater control over the quality and maintenance of the homes, ensuring a consistent aesthetic and reducing potential issues with neglected properties. This can enhance the park's curb appeal and overall desirability, attracting a higher caliber of tenants and justifying higher rents. Despite the benefits, managing park-owned homes comes with its own set of challenges and considerations, particularly regarding financing and selling POH. Acquiring and maintaining a fleet of POH requires significant capital investment, as the park owner is responsible for the purchase, renovation, and ongoing repairs of these units. This increases the park's operational expenses and capital expenditures compared to a land lease-only model. Selling POH to tenants can be a complex process, often involving seller financing arrangements, which carry the risk of tenant default. Park owners must navigate consumer protection laws and ensure compliance with all lending regulations. While POH can accelerate lot fill and boost revenue, the added financial and management responsibilities necessitate a robust operational plan and a clear understanding of the associated risks. Careful financial modeling is essential to determine if the POH strategy aligns with an investor's goals and risk tolerance. Exit strategies. Having a clear exit strategy is as important as the initial investment plan for a mobile home park. One common exit strategy is selling the entire park to another investor or a larger investment group. This typically occurs after the park has been stabilized, value-added improvements have been made, and profitability has been maximized. Investors may choose to sell to capitalize on market appreciation, reallocate capital to other ventures, or simply to realize their gains. Preparing the park for sale involves ensuring all financials are in order, deferred maintenance is addressed, and occupancy rates are high. A well-presented, high-performing park will attract more buyers and command a higher sale price. Engaging a specialized broker can help market the property effectively and navigate the complexities of the sales process, ensuring a smooth and profitable exit. Another viable exit strategy involves refinancing the park and holding it for continued cash flow, or utilizing a 1031 exchange. Refinancing allows investors to pull out equity that has accumulated through value appreciation and loan amortization without selling the property. This capital can then be used for other investments or personal use, while the park continues to generate income. This strategy is particularly attractive for investors seeking long-term cash flow and wealth preservation. Alternatively, a 1031 exchange allows investors to defer capital gains taxes by reinvesting the proceeds from the sale of one mobile home park into another, like-kind property. This can be a powerful tool for growing a real property without incurring immediate tax liabilities. Both refinancing and 1031 exchanges require careful financial planning and adherence to specific legal and tax regulations, making professional advice essential. Legal and regulatory compliance. Adhering to fair housing laws is a non-negotiable aspect of operating a mobile home park. These federal laws prohibit discrimination in housing based on race, color, religion, sex, national origin, familial status, and disability. Park owners and managers must ensure that all aspects of their operations, including advertising, tenant screening, lease agreements, and eviction procedures, comply with these regulations. This means treating all applicants and residents equally, providing reasonable accommodations for individuals with disabilities, and avoiding any practices that could be perceived as discriminatory. Training staff on fair housing laws is essential to prevent inadvertent violations. Non-compliance can lead to severe penalties, including hefty fines, legal judgments, and significant reputational damage. A proactive approach to understanding and upholding fair housing laws is fundamental to ethical and legal park management. Beyond federal mandates, state and local regulations play a significant role in governing mobile home parks, often imposing additional requirements. These regulations can cover a wide range of issues, such as rent control, eviction processes, utility billing, park maintenance standards, and specific tenant protections. Some states have comprehensive manufactured housing acts that specifically address the unique aspects of mobile home park operations. Local ordinances may dictate things like noise levels, pet policies, and aesthetic standards. It is imperative for investors to thoroughly research and understand all applicable state and local laws in the jurisdiction where their park is located. Regular review of these regulations is necessary, as they can change over time. Consulting with local legal counsel specializing in manufactured housing law is highly recommended to ensure continuous compliance and mitigate legal risks, safeguarding the investment. Insurance for MHPs. Comprehensive insurance coverage is a critical component of protecting your mobile home park investment, with property and liability insurance being foundational. Property insurance safeguards the park's physical assets, including common buildings, infrastructure, roads, utility lines, and any park-owned homes, against perils like fire, storms, vandalism, and other covered damages. Liability insurance is equally vital, protecting the park owner from claims arising from injuries or property damage that occur on the premises. This can include slip and fall accidents, playground incidents, or other liabilities related to park operations. Adequate coverage limits are essential to protect against potentially large legal judgments. Working with an insurance broker specializing in commercial real estate, particularly manufactured housing, can help identify the specific risks associated with your park and tailor a policy that provides robust protection, ensuring peace of mind and financial security. Beyond standard property and liability coverage, investors must also consider specialized insurance for flood and disaster coverage, especially if the mobile home park is located in a high-risk area. Standard property insurance policies typically exclude damage caused by floods, earthquakes, or other natural disasters. Therefore, separate policies, such as flood insurance through the National Flood Insurance Program, NFIP, or private insurers, may be necessary. Assessing the geographical risks of your park's location is crucial for determining the appropriate level of disaster coverage. The cost of these specialized policies can vary significantly based on risk assessment, so it's important to factor these expenses into your operational budget. Protecting your investment from catastrophic natural events is paramount to long-term financial stability and resilience. Consulting with an experienced insurance professional is vital to ensure all potential risks are adequately covered. Tax implications of MHP investing. Understanding the tax implications is crucial for maximizing the profitability of mobile home park investments, with depreciation and deductions offering significant benefits. The land portion of a mobile home park is not depreciable, but the physical assets, such as roads, utility infrastructure, common buildings, and park-owned homes, can be depreciated over their useful life. This non-cash expense reduces taxable income, effectively lowering the investor's tax liability. Additionally, various operating expenses, including property taxes, insurance premiums, management fees, and repair costs, are typically tax-deductible. Keeping meticulous records of all income and expenses is essential for accurately claiming these deductions. Consulting with a qualified tax professional specializing in real estate can help investors optimize their tax strategy and take full advantage of available deductions and depreciation benefits, significantly enhancing their net returns. Capital gains and 1031 exchanges are important tax considerations when selling a mobile home park. When an investor sells a park for more than its adjusted basis, the profit is subject to capital gains tax. The tax rate depends on how long the property was held, short-term versus long-term, and the investor's income bracket. However, a powerful tool for deferring capital gains taxes is the 1031 exchange, also known as a like-kind exchange. This provision of the IRS tax code allows an investor to sell one investment property and reinvest the proceeds into a new, like-kind investment property within specific timeframes, thereby deferring the capital gains tax. This strategy can be instrumental for growing a real estate portfolio without incurring immediate tax burdens. Strict rules and deadlines apply to 1031 exchanges. So, professional tax and legal advice is indispensable to ensure compliance and maximize tax benefits. Building a management team. Building an effective management team is crucial for the efficient operation and long-term success of a mobile home park, particularly when considering on-site managers. For larger parks, an on-site manager can be invaluable, serving as the primary point of contact for residents, handling day-to-day issues and overseeing maintenance. Their presence ensures prompt response to emergencies, consistent enforcement of park rules, and a visible commitment to community well-being. A good on-site manager can significantly improve tenant satisfaction and reduce turnover. When hiring, look for individuals with strong communication skills, problem-solving abilities, and a customer service orientation. Clear job descriptions, ongoing training, and performance incentives are essential for motivating and retaining high-quality on-site staff. Delegating operational tasks to a capable on-site manager frees up the investor's time to focus on strategic growth and portfolio expansion. For investors who prefer a more hands-off approach or own multiple parks, engaging third-party management companies can be an excellent solution. These companies specialize in property management and have the expertise, systems, and staff to handle all aspects of park operations, from tenant screening and rent collection to maintenance and legal compliance. They can offer economies of scale, particularly for smaller parks or geographically dispersed portfolios, as they often manage multiple properties. While third-party management incurs a fee, typically a percentage of gross income, it can save investors significant time and reduce operational headaches. When selecting a management company, it is crucial to vet their experience with mobile home parks, check references, and ensure their values align with your investment goals. A strong management partnership is key to maximizing profitability and minimizing investor involvement. Case studies, successful MHP investments. Analyzing real-world examples of successful mobile home park investments provides invaluable insights and practical lessons for aspiring investors. These case studies often highlight how investors identified undervalued properties, implemented strategic value-add initiatives, and optimized operations to achieve significant returns. For instance, a case might detail how an investor acquired a neglected park with low occupancy, invested in infrastructure upgrades and park-owned homes, and then successfully raised rents and sold the park for a substantial profit. Such examples demonstrate the power of due diligence, strategic planning, and effective management in transforming underperforming assets into highly profitable ventures. Studying these scenarios helps investors understand the tangible steps involved in successful acquisitions and the potential for wealth creation within this niche market. They offer concrete evidence of what works and how to apply proven strategies. Lessons learned from successful mobile home park investments often emphasize the importance of community building and tenant relations. Many successful investors prioritize creating a positive living environment, which leads to lower turnover, higher occupancy, and a more stable income stream. Another recurring theme is the value of long-term vision and patience. Significant returns often materialize over several years as value-add strategies are fully implemented. Successful case studies also underscore the necessity of understanding local market dynamics and regulatory environments, as these factors can heavily influence a park's performance. By dissecting these real-world examples, investors can gain a deeper appreciation for the nuances of mobile home park investing and develop a more robust and resilient investment strategy. These practical insights bridge the gap between theoretical knowledge and real-world application, preparing investors for actual market conditions. Common pitfalls to avoid. Ignoring thorough due diligence is one of the most common and costly pitfalls in mobile home park investing. Rushing through the process or neglecting to verify financial statements, inspect infrastructure, or conduct environmental assessments can lead to significant unforeseen expenses and liabilities. Investors might overlook deferred maintenance, discover costly utility issues, or inherit legal problems that severely impact profitability. A superficial review of a park's financials can mask inflated income figures or understated expenses, leading to an overvaluation of the property. Failing to understand local zoning and regulatory environments can also result in development restrictions or compliance issues. Comprehensive due diligence, though time-consuming, is the investor's best defense against these pitfalls, ensuring a clear understanding of the asset's true condition and potential. It is the foundation of a sound investment decision, preventing costly surprises down the line. Poor tenant management is another critical pitfall that can undermine the success of a mobile home park investment. Inadequate tenant screening can lead to problematic residents who disrupt the community, fail to pay rent, or damage property. A lack of clear park rules or inconsistent enforcement can foster a chaotic environment, driving away good tenants and making it difficult to attract new ones. Neglecting tenant concerns or failing to maintain common areas can lead to dissatisfaction, high turnover, and a negative reputation for the park. Effective communication, fair treatment, and a proactive approach to addressing issues are essential for fostering a positive community. High vacancy rates, increased legal costs from evictions, and a diminished park value are direct consequences of poor tenant management. Investing in robust management systems and skilled personnel is crucial to avoid this pitfall and ensure the long-term stability and profitability of your park. Future trends in MHP industry. The mobile home park industry is continuously evolving, with technology integration being a significant future trend. Implementing smart park management systems can streamline operations, from automated rent collection and utility metering to remote monitoring of infrastructure. Digital platforms for tenant communication, online maintenance requests, and community engagement can enhance resident satisfaction and operational efficiency. Data analytics can provide valuable insights into market trends, tenant behavior, and operational performance, enabling more informed decision-making. Embracing technology can lead to reduced labor costs, improved responsiveness, and a more modern living experience for residents. Investors who proactively adopt these technological advancements will gain a competitive edge, making their parks more attractive and profitable in the long run. The future of MHP investing will increasingly rely on smart solutions to optimize every aspect of park management. Sustainability and green initiatives are emerging as important trends that will shape the future of mobile home park investing. Implementing energy-efficient lighting, water-saving landscaping, and renewable energy sources like solar panels can reduce utility costs for both the park and its residents, while also appealing to environmentally conscious tenants. Offering recycling programs, promoting eco-friendly maintenance practices, and developing green spaces within the community can enhance the park's appeal and contribute to a positive brand image. These initiatives not only demonstrate corporate social responsibility, but can also lead to long-term cost savings and increased property value. As environmental awareness grows, parks that embrace sustainability will be better positioned to attract and retain residents, meet evolving regulatory standards, and secure financing from socially responsible investors. Integrating green practices is becoming a strategic imperative for modern mobile home park owners. Ethical investing in MHPs. Ethical investing in mobile home parks goes beyond financial returns, focusing on the positive community impact and responsible ownership. This involves understanding the vital role mobile home parks play in providing affordable housing and striving to maintain or improve that affordability. Responsible investors consider the well-being of their residents and the broader community, aiming to create safe, clean, and thriving environments. This approach can involve investing in community improvements, supporting local initiatives, and ensuring fair and transparent business practices. A park that is managed ethically often experiences lower turnover, higher resident satisfaction, and a more positive public image, which can ultimately contribute to long-term financial success. Prioritizing community impact aligns investment goals with social responsibility, fostering sustainable and mutually beneficial relationships with residents and the surrounding area. Fostering strong tenant relations and providing adequate support are cornerstones of ethical mobile home park investing. This means treating residents with respect, maintaining open lines of communication, and being responsive to their needs and concerns. Implementing fair rent increase policies, providing clear explanations for any changes, and offering assistance or resources when residents face difficulties can build trust and loyalty. Ethical investors avoid predatory practices and strive to create a stable living environment where residents feel secure and valued. Offering community programs such as financial literacy workshops or social events can further strengthen tenant bonds and improve quality of life. A supportive and respectful approach to tenant relations not only fulfills an ethical obligation, but also contributes to a stable, well-managed park with high occupancy and reduced operational challenges. This human-centric approach is increasingly recognized as a key differentiator in the market. Developing a business plan. Developing a comprehensive business plan is an essential step for any mobile home park investor, providing a roadmap for success. This plan should clearly articulate your investment goals, both short-term and long-term, and outline the strategies you will employ to achieve them. Goals might include specific occupancy rates, target cash flow, value-add initiatives, or desired exit timelines. The strategy section should detail how you plan to acquire, operate, and potentially improve the park, including your approach to tenant management, marketing, and maintenance. A well-defined business plan forces you to think through every aspect of the investment, identify potential challenges, and formulate solutions. It serves as a living document that can be updated as market conditions change or new opportunities arise, guiding your decisions and keeping your investment on track. A critical component of the business plan is detailed financial projections, which forecast the park's income, expenses, and profitability over a specified period. This includes projecting lot rents, utility income, and other revenue streams, as well as estimating operating expenses, capital expenditures, and debt service. Creating realistic pro forma statements, including cash flow projections, income statements, and balance sheets, is vital for assessing the investment's financial viability. These projections help determine potential returns, identify funding needs, and evaluate the impact of various value-add strategies. Financial projections are also indispensable when seeking financing from lenders or presenting to potential investors, demonstrating the park's earning potential and your understanding of its financial dynamics. Accuracy and thoroughness in this section are paramount for attracting capital and making sound investment decisions. Scaling your MHP portfolio. Once an investor has successfully acquired and stabilized their first mobile home park, scaling the portfolio by acquiring multiple parks becomes a natural progression. This strategy allows for accelerated wealth creation and increased diversification. Acquiring additional parks can be achieved through various methods, including direct purchases, portfolio acquisitions from other owners, or even through partnerships. As an investor gains experience and builds a track record, it often becomes easier to secure financing and identify new opportunities. However, scaling requires careful consideration of geographic diversification, management capacity, and market dynamics. It's crucial to maintain the same rigorous due diligence process for each new acquisition to ensure continued success. Expanding your portfolio strategically can lead to significant economies of scale and enhance your position as a prominent player in the manufactured housing market. Scaling a mobile home park portfolio effectively also involves leveraging synergies and efficiencies across multiple properties. Centralizing administrative functions, such as accounting, marketing, and legal services, can reduce overhead costs per park. Implementing standardized operational procedures and management systems across all parks can improve efficiency and consistency. Bulk purchasing for maintenance supplies or utility services can lead to significant cost savings. Furthermore, a larger portfolio can provide greater negotiating power with vendors, lenders, and insurance providers. Sharing best practices and resources among parks can optimize performance and enhance profitability. These synergies not only improve the bottom line, but also create a more robust and resilient investment portfolio, capable of weathering market fluctuations and maximizing long-term returns. Strategic scaling transforms individual assets into a powerful, integrated investment enterprise. Conclusion: your MHP investment journey, embarking on the mobile home park investment journey, offers a unique path to real estate wealth, characterized by stable returns and a resilient asset class. Throughout this course, we have covered key takeaways, including the importance of thorough due diligence, understanding market dynamics, and implementing effective operational management. Remember that success in this sector hinges on meticulous planning, a deep understanding of legal and regulatory compliance, and a commitment to fostering positive tenant relations. The ability to identify value-add opportunities and execute them strategically is also paramount for maximizing profitability. This specialized niche requires patience, continuous learning, and adaptability, but the rewards for diligent investors can be substantial. Your journey as a mobile home park investor is a continuous process of learning, adapting, and growing your portfolio. As you conclude this course, consider the next steps in your mobile home park investment journey and leverage available resources. This might involve further in-depth research into specific markets, networking with experienced investors, or seeking mentorship from industry professionals. Continuously educate yourself on market trends, regulatory changes, and innovative management strategies. Explore online forums, industry associations, and specialized publications dedicated to manufactured housing. Remember that building a successful portfolio takes time and consistent effort. The knowledge gained from this course provides a strong foundation, but real-world experience and ongoing learning will be your most valuable assets. Embrace the challenges, celebrate the successes, and continue to refine your approach as you build your mobile home park empire. The opportunities in this sector are vast for those prepared to seize them.